Welcome, all my wealth builders. You're listening to the Do.Different.Better Show. I'm your host, Elaine Rasmussen, founder and CEO of Social Impact Now and founder and CEO of Connective Institute, as well as the managing partner for the Integrated Capital Fund. Once again, I have another amazing, awesome episode with my special guest who you are going to just love and adore as much as I do. His name is Fadi Habib, founder of Legacy Wealth Builder Academy. Let me tell you just a little bit about my guest because he is just a rock star. Fadi is the founder and CEO of Legacy Wealth Builder Academy. He assists professionals in building wealth through strategic options investing. With 30 years of engineering, business, and education at companies like Schlumberger and BlackBerry. Who remembers BlackBerry? I do. I loved my BlackBerry. He transitioned from a corporate career to real estate investing and financial education. His academy teaches a structured and responsible options investing approach using the G.R.O.W.T.H growth system, focusing on risk management and consistent execution. As speaker and educator, Fadi aims to empower professionals to achieve financial freedom through options investing without excessive risk or screen time. Fadi, welcome to the show and thanks for coming on.
Hi, Elaine. Happy to be here.
Awesome. Well, we're going to go ahead and just jump right in, which is the question I ask all of my guests. What is your earliest memory of money, and when did you realize that money had influence?
Good question. So I was raised in Egypt from a mid-income family. So we're also a religious family. So there's a lot of places that teachings that say that if you're rich, then there's some kind of evil in you somehow. There's something wrong. And all the different culture that comes with it, that it's not easy to make money. It's very hard to make money. I grew up, my father used to work in another country. He got a job in Saudi Arabia, I think. And because he wanted us to be in schools, having good schools in Egypt, not in Saudi Arabia. So most of the year I did not see my father because we only went to him in the summer vacation. So bottom line is the culture was, it's very hard to make money. There's something wrong if you make money, right? And there's some kind of holiness in not having a lot of money. So all of these stuff I have to deal with when I grew up, in terms of dismantling it and having my own views on and taking responsibility for one's own financial future as well. Good question.
I love that. So when you think about that, what were maybe sometimes some of the ways that maybe as you're starting to become a professional, were those ideals maybe were counter, especially if you're working at a place like BlackBerry, which is a like very highly corporate organization. Where did you find maybe you were having some inner conflict between like the messages that you got as a young person and being now in this corporate environment, which is very much about access and excess and access?
So there's no conflict in working in any of the companies, because part of this culture is that the only way to do money is to be an employee. So it was very aligned for me in all of my corporate world in terms of you go work for somebody else. Again, part of that culture is that it's very risk averse to the point whereby it paralyzes you. So I like people being risk averse in terms of not gambling with their money. But if you're risk averse to the point whereby you're not investing, that's where the problem is. And this is where I grew up with. Because again, part of the baggage is that all of what my parents did in terms of investment, they think it lost because they got again, nobody here is at fault, right? Most of the people that are listening as well, we don't get taught this at school. Our parents usually do not teach us that. So you either end up with a big baggage that forces you to be at the same financial position of your parents, or you take responsibility of, okay, I didn't get to learn this properly. I actually have a lot of different viewpoints and cultural imposed on me. I need to test all of that to really figure out what is right, what is wrong. because, and some of it is not completely right, because again, money can corrupt people again, but it's not because of money corrupts, it's because of you corrupt, right?
Right.
So, right. So,
The decisions that you make, the choices you make.
exactly. So it's basically, if you start getting money and start abusing people, it's not because the money made you abuse people. It's just you're an abuser, right? It's not the money. It's like if you're using a knife, you can use the knife to make humongous amount of delicious food, or you can cut yourself, or you can kill people. So it's like all of that gamut is there. It has nothing to do with the knife. It's you.
Right.
So basically, completely aligned with go work 9 to 5. It comes with all opposition from the family if I want to do something outside. So if I'm spending a lot of time trying to invest in real estate or learning how to do stocks, then what are you doing? Why are you not taking care of your work and family? Why are you wasting all this time going to courses? Like, guys, I'm not wasting. I'm investing. I'm learning how to get out of this rat race.
Right.
But and again, another shift when I went out of corporate, decided to be, I don't want the 9 to 5. I'm going to focus on my investment and business. And again, what are you talking about? This is so risky. You got to be responsible and not do that. So, so it's killing me, right? So only when you're successful, these people come around saying, you did well. So,
oh yeah, you're great. You're amazing. I know
yeah.
one of the things that I talk about is, especially because it can be so challenging for, I think, sometimes women or for people of color to go and make that shift. And when I talk to my entrepreneurs, I say, you have to remember, you have been conditioned to think that your only value is as a worker and a consumer. And if you understand that you've been conditioned to think that your only value in this world is to work be somebody else's labor, and then take what you earn from that labor and go and spend it on the making that you made, right? Then of course it's hard for you to think about going off on your own and starting a business or going in and investing. And which is a great segue to my next question, is like, how did your journey from working at BlackBerry turn into real estate investing? And what were some of the highs and the lows as part of that journey?
Very quickly, I recommend to everybody to read the book Cash Flow Quadrant by Robert Kiyosaki. It explains what is the different 4 quadrants: employee and self-employed and investor and all this stuff. So very important. Okay, coming back to your question. So at very early age, I read the book and understood that the E is having the worst out of all. We pay taxes, even like the employee pay taxes before you see the money versus the rest. You can't write off anything. You're spending all of your time and effort making money for other people, the shareholders, which are really the I. So I decided very early, and I graduated from engineering at 20 or so. I decided very early that I need to learn I cannot get it from my parents. I got to do that my own. I know that I would be investing a lot of time, a lot of trial and error, but I was up for it. I wanted to. So all of my life in the corporate world, I used to go 9 to 5, and it was really never 9 to 5, because like my first job, Schlumberger, for example, I was not allowed to sleep except when I finish a job. So if you start a job, you can't sleep. So my longest job was 3.5 days. And I was dealing with explosives, radioactive materials. I don't think what they do is actually legal in some countries.
No, it's not.
But anyway, my longest job was 3.5 days. So I was doing that. And then after work, I used to say, okay, I'm going to work on myself. That's my time. So I'm going to learn how to do. I started with real estate investing. So that was like 25 years ago or so. Did a lot of mistakes. Gladly, I learned a lot. And I did very well with real estate. And then after 10, 15 years ago, I had this view, again, part of the baggage, is that anybody who invests in stocks and options is a gambler, is a not irresponsible investor.
Mm-hmm.
Why? Everybody around me was losing money. So what kind of investment that makes everybody lose money around? Like, there's something wrong. So I went to this course. I was open-minded. Not really. I was there to make sure that I prove the guy wrong, basically. Right? I'm right and he's wrong. But I was open, and I discovered that there is a way. There's a systematic way. It's an investment. It's not a lottery ticket. The fact that everybody else is using the stock market as lottery tickets. So when you're buying an Apple stock, you're not buying an Apple lottery ticket. You're buying a business. Right. And if you want to buy a business, if you're responsible, you need to ask some questions. You can't just buy a business. You can't just buy a property thinking it's a investment in real estate without asking a few questions. What is the rent?
Right.
What is cash flows? What are the expenses? Is the location good? Are the renters really? Is it really? Can I find good tenants? even real estate investors who are trained to ask all these questions in the real estate market, when they come to the stock, it's total gambling. It's a casino. You just buy because somebody is telling you it's buying, or you buy because it's going really up. This is not the right way. So most people, if you don't get trained, people usually buy when the stock is at the top, wait till it goes down, and then they sell at the bottom. It's a sure way to make
the opposite.
If you do nothing, that's why everybody's losing, right? So you need to ask yourself, if you're buying an Apple, is Apple making money? It's a business. You're not buying lottery tickets. Stock is a part of a business. Mm-hmm. How does business get evaluated? By the ability to make money, full stop. So you need to know what is the difference between Apple and BlackBerry, not for the products, as a business. Right. So for me, Apple is investable. It's a good company, meaning making a lot of earnings. You need to understand what is free cash flow, how much debt, all of these stuff. I will not invest in BlackBerry because losing money. It's not that I can buy a BlackBerry as a product, right? So I don't care if the products are sexy. Is it making money or not? That's the evaluation of a business.
Right.
Also, you need to understand if the stock is cheap or expensive, and it has nothing to do with the price. You need to understand the market behavior or the stock behavior. In the short term, the stock market there's no correlation, absolutely no correlation between the value and the price of the stock. So you can have a stock that is $4, like BlackBerry, and it's extremely expensive because there's no value to it, compared to another stock that can be $500 and it's very cheap because the real value is 1,000. So, and you need to understand the market behavior. For example, everybody thinks that the stock market needs to go up all the time, otherwise there's something wrong. That's completely wrong. The stock breathes, like inhaling and exhaling. It goes up and then exhales a little bit. Okay, market correction, if it's more than 20%. So we know the statistics. 2-3 times a year, it goes down by 5%. That's normal. There's nothing wrong. One time a year, it's going to go down by 10%. Every year and a half, 15%. Every 2 years, 20%. We know that. And if you think that your child, if you have a newborn, and the child should only inhale because he needs oxygen or she needs oxygen, if this kid starts exhaling, you will think there's something wrong. You will try to fix it. You will try to get a doctor. Relax. It's okay. Market goes down and it's no. And it gives us a huge opportunity if you understand what you're doing. So for example, the example I always give is Meta. At some point, it was for $100. Meta, Facebook, is a very good company, makes a lot of money. And then because of COVID and some other stuff unrelated, and that's kind of the beauty of the stock market, is that it will give you opportunities. This stock, the same as 400, went down to 80. Meta was making money at 400 and making more money at 80. Why did the stock go down? The stock market in the short term is a bunch of drunk people assigning prices. It is.
I agree. I'm laughing because I agree.
It has nothing to do with the real value. So it went from 400 to 80. So a lot of people bought at 400, panicked at 80 and sold, losing a lot of money. Right now, Meta, because it's a good stock, it's now at 700. One of the rules that you need to understand is this. Peter Lynch said that. There's absolutely no correlation between the price and the value of a stock on the short term. Short term is 2 years.
Right.
The stock market. And there's 100% correlation between the stock and the value, and the price and the value of the stock on the long term, which is 5 years plus, which means if you understand this, if you understand that Meta is a good stock and it went down to 80, now you're going to be thinking of, this is an opportunity. If the real value, the intrinsic value is $300, and I teach that, all your effort will be how to buy at 80, right? How to buy at 80, opposite of what the market is doing. So lots of education, lots of paradigm shifting when it comes to how to make money in the stocks. And it's simple, really. It's not a big deal. It's just that people think that the only way to do it is just by speculating and gambling.
Right. I share your view. I was just talking with a women's group, and we were talking about investing in the stock market, and they use some of those terms of like, yeah, it's gambling. And I said, I want you to think about it as it's an organic, living, breathing thing. I said, the people in it that make up the company are living, breathing things. So that in turn makes the company a living, breathing thing. And we started to look at, we looked at a stock, and I'm like, think about this as a heartbeat, right? Just to your analogy of breathing in and breathing out. It's like you have, and here are things that we know just from the laws of physics. What goes up must come down. So if you see something going up and going up, well, there's going to be a correction. It's going to go down. Now, can we anticipate that? There's some relatively little, there is some predictability, right? And looking at taking away from the short-term view and versus the long-term view. So I said, if we were only looking at this certain period, yes, it looks like, oh my God, this stock has plummeted. But I'm like, if you zoom out, you can see that the trend of this stock is always going up. And the trend of the market, the trend of the stock market has trended up throughout its existence. It's gone up over time, right? But you've got to remember to take that long-term view versus the quarter by quarter, or like you were saying, the 2-year view. So I want to wrap up this segment, and this has been so great of just really understanding and learning about your story and your journey in this segment. Coming up in segment 2, we're going to be going more into Fadi's real estate portfolio, what makes up his portfolio, and then we're going to be transitioning to actually learning about the options and how to exercise those, what they are, why you should leverage them, and how you can leverage them. So you are listening to the Do Different Better Show. I'm your host, Elaine Rasmussen. I'm going to see you after the break. Welcome back, everybody, to the Do Different Better Show. I'm your host, Elaine Rasmussen, and I have an amazing guest, Fadi Habib from Legacy Wealth Builder Academy. He has been dropping some gems, and I can't wait because we're not done yet. So, Fadi, let's get right into it. So, you talked about how you made this shift into real estate, and so I'd like to talk a little bit more about that. Can you share with our audience maybe how did you acquire your first property? What were some of the lessons that you learned as you acquired your third, fourth, fifth property? And what are maybe some things that people can think about in how to leverage a real estate portfolio?
Okay, so real estate is very unique compared to stocks. Real estate is not that volatile compared to stocks. So every beast has its own way of dealing with things. I need to understand that. One of the main differences, for example, is that in real estate, I will never buy the property cash. I will have to use a bank to use leverage. In stocks, it's the opposite. I will never use leverage. I will never be in margin because it's very volatile, and there's the mistake here is very taxing if you're borrowing money. So my first property, I do remember. Again, I started in real estate, not in stocks. So I was very afraid. My hand was shaking the first time I was signing a contract because I had no idea what I'm getting into. I went to a lot of courses, but unless you take the first step and go through this wall of fear, you'll never start. I have friends that I talked to them 20 years ago that you need to go and even buy your own house, right? Don't even buy a rental property. And they're waiting for the right time when the market goes up, when the market goes down, when interest rate goes up, when interest rate goes down, and fast forward now, they did nothing. So you got to be an action taker. And the performance measure of anything, real estate or not, is actions. It's not how smart you are or the mental capacity or how much analysis you did, because all of that does not matter. Your intention does not matter. Mm-hmm. It's what action you do. And that's why you see people with relatively low IQ, but they take a lot of action.
Yes.
And they do much better. Why? Because you take an action. What's the worst thing? It's going to be wrong. They adjust. They learn something that you will never learn, because you will never learn how to avoid mistakes by just reading a book or doing YouTube. So you gotta go into the field. You cannot learn soccer or football reading books. So I started with, again, the people who taught me in the beginning weren't really good. So one of them weren't really good because they focused on no money down. So I used to buy properties in the beginning and get money at closing. Like, not pay, get money at closing. There's some tricks you can do, all legal, of course. But they also taught me that you need to try to squeeze the deal. They weren't very ethical in terms of, come one day before closing and change something. So luckily I didn't lose money with this system, but as you go, you adjust and you go to right people. So I went to this really beautiful network called RAIN, Real Estate Investment Network. And I learned that the tenant is one of the best business partners. You need to respect him or her a lot.
Yes.
The guy is buying the house for you. What kind of is that? You need to put him in a pedestal, not try to screw him over like the first people told me. So Imagine that you're paying 20% of the property or 10%, and then the tenant is paying for it if it cash flows, and we only buy cash flowing properties. They're paying for it for the next 25 years, making you money from equity, cash flow, tax write-offs, capital appreciation. So I did 1, 2, 3, 4, and then I did some commercial and learned from my mistakes and capitalized on it. And once you figure out the right thing and learn how to get good tenants, proper tenants, in good locations, good properties, we call it A locations or B locations versus C or D, which I started with, life becomes easy. You're making money without doing, that's the beauty of I, because same as I in stocks, I'm not working at Apple all day, but I'm gaining from their profit. I am not building or cleaning the house every day, but I'm gaining all of that from renting the house. I is beautiful if you figure it out. The beauty of I in real estate or stocks is that you can actually give it to your children. If you are the CEO of Apple, you cannot give that job to your son. You cannot.
Right?
But if I have my own business or I have stocks, I can give it to my son, as well as I can sell it. You cannot sell your job in Apple. You can sell your stocks or real estate or your business. The most important thing, that's why I called my company legacy, is that you can give that legacy, and I did not mean the money. I meant the knowledge. You can give that to your children so that they can escape the rat race quicker. Real estate did amazing for me. I know it can do a lot if you're doing it correctly. Again, no gambling. You gotta invest properly. You gotta learn what you're doing. Not any real estate will make you money.
Right. I know for me, when I had my properties, going back to your comment about treating your tenants as like kings and queens, I was very much, I had written in my lease, hey, if you pay your rent on time for 12 months, you get a perk, right? So an upgrade on a faucet, you get to paint a wall, whatever color you want, right? Because, normally we're like, we don't want them painting the walls, right? But I'm like, hey, every year you'll get another upgrade, right? A couple of cans of paint cost me what? $50, right? From now for them to be like, oh my God, they did this for me. And now I have my favorite color on the wall. They're far more likely to stay, right? If I upgrade a faucet, the faucet cost me $150. Who cares, right? They feel special. They're more likely to stay because the more comfortable I can make them, the less likely they're going to move, right? So to do those things of just being, and even if they have to pay the rent late, right? It's like, I would tell my tenants, I'm like, listen, just don't let it be a surprise. Don't have me call you on the 10th, call me on the 1st and be like, hey, this is what's going on. I'd much rather work with you than to just be out in the dark. And I think that's another thing that I think sometimes when people, as you were saying, the unethical way of just just kick them out. And it's like, first of all, do you know how much work that is? I had one tenant where I had I had a 14-foot truck that I had filled up twice of all their crap. I'm not trying to do that every year.
We give them Christmas baskets. Every time I go there, I come with coffee. Why not? Why not have a good relationship, right? Why not? It's
exactly.
easier.
It's so much easier, right? Than the alternative. I don't know about where you live, but right now, housing court now, the filing fee is $600. I'm like, no, I don't want.
I'm in the worst place. I'm in Ontario. We can't get rid of a tenant even if they're not paying. It's just so horrible. Anyway, but again, depends on the market. But anyway, you understand the industry, you understand the rules of the game. You give the tenants all of their rights and more.
Right.
Treat them well, and I screen very well. I'd rather leave the house empty than put a tenant that I don't. Basically, for me, you're going in partnership. It's a business partner, right? So I'm giving you something very valuable for me, my house.
Yes.
And so, got to be a good tenant. And if he or she is a good tenant, he deserves to be treated with utmost respect.
Yes, I love that. Well, now let's kind of take a hard right and let's really get into, you talked about you went from having real estate to getting into investing and leveraging options. So if you could educate our audience, what's an option how is it advantageous? And maybe if you can talk about like, so how does somebody get started if they're brand new to like exercising options?
Okay, so option is a derivative or an add-on to a stock. So it's the stock market. So first you need to learn stocks. You can't just go. One of the mistakes I did is that I started by learning options before stocks. So you gotta learn what is stocks and what is a good business. That's very important. You will use later in options. Options, the word option, telling you have an option of doing something. You have a path A or B, and you have the option to do A or B. So option is a contract. Unlike stocks, when you buy a stock, you're not forced to sell it at all. You can leave it for like 40 years, like Warren Buffett does. In options, it is tied to a contract. Contract can be 1 day, 1 week, 1 month, 1 year, whatever. Okay, so first thing, it's time bound, which is very important. So I'll give an example. So the example that I usually like to say is this. Let's say, Elaine, you're my friend, and sometimes I have these business ideas that I need somebody to talk to about them. So I'm going to say, Elaine, I'm going to give you $10 to have the option of, in the next month, if I have a business idea, I can call you and talk to you about the business idea for about 5 minutes. Okay? In this example, I am buying an option. When you buy an option, you have the right. In this example, I have the right to call Elaine whenever I want in the next month to get her opinion about a business idea. In this example, Elaine is the seller of the option. You're selling something. When you're selling something, you're getting something. I gave you $10 for that privilege. So you have the obligation. If you see Fadi on your phone, you have to pick up, because I will talk to you about a business. Okay. So we use options. I give you an example of selling options. Same thing as insurance. Everybody is buying insurance for their car, for example. I've been for like 30 years. I paid them so much. They made so much money. Okay.
That's right. All of us.
Yeah. What exactly are we doing with insurance? It's exactly the same thing. Every year you buy a contract for a year, whereby if something happens to the car, you can call them and tell them you have to buy the car. So you're paying. I'm buying the insurance, or buying the option here, buying a put, saying that in the next year, if the value of the car went down because of an accident or whatever, I have the right of making you buy it. The insurance, in this example, is selling an option, selling insurance, saying that if the car was damaged or it went down for any reason, I would have the obligation, if Fadi called me, to buy the car from him, even if it went down. Let's take this into the stock arena. Elaine, you have 100 shares of Apple. Okay, let's say, or Meta. Meta right now is at like, I don't know, $700. You are so afraid that Meta would go down below 600. So afraid. Okay. So you come to me saying, Fadi, I know that you collect stocks, you buy stocks. Let's have an agreement. Let's have a contract that says for the next 30 days, if the stock went down below 600, you will buy it to me at 600. You will buy it from me at 600. So for you, it's a little bit of insurance, because you don't want to buy it to keep it if it's below 600. You're cutting your loss. From my side, I'm selling options. I'm selling a put. This is how I think about it. I know Meta is a good stock. Remember, Elaine doesn't know that Meta is a good stock. She's just a gambler. I know Meta is a good stock. I want to buy Meta, in this example, at 700. I will be happier to buy it at 600.
Right.
Okay? And if I go into this contract, Elaine will pay me $50. So essentially, if I get to buy it at 600, really I bought it at 550, even better. So let's talk about this. This is an example of selling a put. I'm the seller of the put. Elaine is the buyer of the put. I know there's a lot of terminology, trying to make it as simple as possible, but it needs you hearing this. So in this example, at the end of the contract, Elaine will have the right of telling me, Fadi, the price of Meta went down to 570. You have to buy it from me at 600, and I will gladly do so, because I wanted to buy it from the beginning.
Okay.
In this example also, if the price of the stock was 750 or 650, Elaine cannot exercise it because the contract is clear. You can only exercise the contract if it's below 600. let's talk about my position, because this is what I teach people, is to be the seller of the put. I want Meta. I want to buy it. Most of the time, Meta will go 700 or go up or go a little bit down. Basically, it will not hit 600. So most of the time, I will end up making the $50 after a month without any risk. In the worst case scenario where the stock went down below 600, the worst case that can happen, I don't lose any money. I just bought a stock that I want to buy, that I know is a good stock.
Yeah, that you wanted anyway.
Warren Buffett does this all the time. There's an example of him wanting to buy Coca-Cola at 35. It was like 40. And he went, sold some puts because he was hoping that it goes down to buy it, but it didn't. He ended up making $6.5 million just for waiting for it to go down. It didn't go down, but just for waiting, he got $6.5 million. It's a great strategy, but also I need to qualify. Options are like, there are 50 different ways to do options. It's extremely risky. You don't know what you're doing. Very risky if you don't know what you're doing. So you need to know what you're doing. You need to learn. You need to, I always teach people, you have to train in something called a paper trading account. A paper trading account is a free account. You open it with any of the brokers, and they give you $1 million free money. So you, if you made money, you don't take it to the bank, and if you lost money, you didn't really lose anything. It's not your money anyway. But it's a
way to get practice, to start to understand how all
right these... and you have no business going from paper trading to live trading before you prove yourself that you can make money. Otherwise, maybe the person is teaching you is not teaching you correctly, or you're making mistakes.
So, quick question before we go to the break: Do you know how much Warren Buffett had to spend to make, like, how much did he have to spend in options before cashing in on the $6 million?
Zero. He just agreed to buy Coca-Cola 35. You don't pay anything. You get money day one. You got 6.5 day one. So in the example, the buyer of the option pays, the seller of the option pays.
Seller. Okay, gotcha.
So in this example of Meta, I took from you $50. I didn't pay anything. I just you know what I'm saying? So same as the insurance company. Insurance company doesn't pay. They just collect money. It's a beautiful way of doing things if you know what you're doing.
That's amazing. I love that. And that's
with proper risk mitigation, right?
Yes. And we'll talk about proper risk mitigation, and we'll talk about the 12 types of freedom that you talk about. So let's head into the break. You're listening to the Do Different, Better Show. I am your host, Elaine Rasmussen, and I have my amazing guest, Fadi Habib of Legacy Wealth Builder Academy. Don't forget to come back and join us at the... We're going to talk about the 12 types of freedom. You don't want to miss it. I'll see you in a little while. Welcome back to the final segment of the Do.Different.Better Show. I'm your host, Elaine Rasmussen, and I have the amazing Fadi Habib with Legacy Wealth Builder Academy. He had just dropped some amazing, he just gave you like $1,000 course on options. So I think it's something you should listen to over and over and over again. One of the things that we talked about that I think is really important, and I've talked about on the show, is having a paper account. A lot of folks like Investopedia, they have a paper account. Some of the other large investment firms have a paper account where you can go online, you get $1 million to play with, right? So you can really start to understand, how do these things work? What are the mechanics? What's going to be your structure? How are you going to manage this as an opportunity, right? Because it's going to be something that requires some structure and commitment. So with that, any last thoughts before we get into the 12 types of freedom? Any other pieces of advice that people should know before they either start their paper account or before they start thinking about getting into options, Fadi?
Can you rephrase the question? What?
Yeah, sure. Is it, we just talked about options. Is there any other thing that you think that people should know before they start working on in a paper account with options?
It requires some education, and you got to start, but please treat it with respect. Options, if you don't know what you're doing, there's a lot of risk involved. There's a lot of risk mitigation things as well. So it's something learnable. There is a way. It's not very difficult, but there is a way to do it, and you make a lot of money out of it in a responsible way. Do not treat it as a casino.
What are some of those risk mitigation tactics? Maybe if you can give us 2 or 3 just for folks to be thinking about.
Okay, the first one is that you cannot do options. Again, remember, it's insurance. You will always get more money if you insure bad properties or bad cars, or right. Your premium on a car that is stolen a lot is much more. You have to pay more because they tell you they will always get more money from you for Honda Civics because it gets stolen a lot. So when you are insuring stocks like what I'm doing here right now, I will not insure bad stocks. So this requires knowledge of what is a good stock. That's why I start teaching people what is a good stock in the beginning. If you're an insurance company, do not insure the houses in the hurricane belt of Florida. Why? Because you're going to make a lot of money because there's a lot of risks. You get paid more. Mm-hmm. But at some point of time, hurricane will come and you will lose your shirt, right? So number one, the basis here, the pillars of the house is that it is good stock, right? Because you will end up buying it. You don't want to be buying bad stocks. That's number one. Number two, zero margin. Yes, you can make 3x the profit at the same amount of time with margin, but we never use margin. Why? Because stocks, it's very volatile. Even good stocks like Meta goes down by 80% at some point. If you're using margin, and I do have a case study of somebody in Canada did that. His life savings were 100K. He said, I'm going to buy NVIDIA, which is a good company, beautiful company. His mistake was that they gave me 300,000 instead of 100. So I put 100. They are allowing me to buy with 300. So he went bought NVIDIA with 300,000 so that he can make 3 times the profit. COVID happens. NVIDIA went down by 40%. So 40%, if it 3x's your profit and 3x's your losses.
Right.
3x, so 3x losses, 40 times 3 is minus 120. So he got liquidated and he lost all of the $100,000. So number two, zero margin. And you need to have the discipline of not being lured. And here's the problem with new investors, and I went there as well. When you make money for a year and a half, you think you're invincible. You think you're smart. So I was stupid enough to think I'm smart. So you think you're smart, you think you figured it out. You know what it is. It's just the market was up for a year and a half. It's just due for correction. So anyway, so like you always need to be in this mode of how do other people are losing money here? How do I risk mitigate?
I love that. Thank you so much. Well, now let's turn into this because you and I in our pre-interview, you talked about this 12 types of freedom, and I didn't get them all, but I was just like fascinated by that. Can you talk to us about redefining freedom and more specifically the 12 types of freedom? Tell us what that means to you and how should our listeners be reframing freedom?
So sometimes a lot of people, when they say financial freedom or freedom, they think of financial freedom, but they really mean the rest of the types of freedom. Mm-hmm. For me, now that I meditated a little bit about it, I know. For me, it's time freedom. The fact that I have my 24 hours. I don't have a 9 to 5. So I teach. So other than the 1.5 hour of fixed lecture that I have to do in a week, I can mark the students at 3 a.m. in the morning. I can do nothing one day and work 24 hours the next day. I own my time. I can, second type, location freedom. I can go to Egypt for 2 months, which I did last year, and do everything I need to do because I structured my life to be location free. I can be very productive anywhere in the world with an internet connection. I can, so time, location. There's also relationship freedom. I don't have to go out with the people at work if I don't like them. Right? How many times you have to talk to your boss because he is your boss. Like, you can't do anything. And as a good worker, you have to be nice to your boss. Like, it gives you a lot of freedom, creative freedom. I can spend some time doing some music or doing what I want, which I could not do before. Educational freedom. Now I can study stuff just because I want to study it versus I was pushed to study stuff like engineering, or I was pushed to go to medicine. I had the grades, but I didn't go. That was a mistake. But anyway, because of it's just financial. It's career freedom. I chose to be in coaching. It's not that it's imposed on me. I got to tell you, if all of the coaching and the business that I'm doing was completely free, not getting paid, I will do it because I like it. I like this quote that says, when people don't know if you're really playing or working, that's a level of mastery you want to be achieved at. And tell you the truth, a lot of times I'm giving a lot of time without any financial rewards. And I'm not unhappy. I'm just happy. There's this kind of flow to it. Flow, this is a state whereby you lose time. You're doing something like, I don't know, reading a book or working on something that you really, really like, that you have absolutely no sense of time. So there's freedom of purpose. I'm choosing right now that this is the way I want to spend my time, getting people out of the rat race. Yes, I'm making money out of it, but that's my purpose. This is my contribution. So the problem here is that all of that, the pillar is financial freedom. Without financial freedom, you do not have your time. You're stuck 9 to 5. And in BlackBerry, for example, first day they gave me a BlackBerry, I was so happy. I did not understand now that I have a BlackBerry. I have to reply to emails 24 hours a day and get calls 24 hours a day. I didn't know that. So time, financial, location, relationship, emotional freedom, creative, spiritual, all of these stuff, usually it needs financial freedom to give you the freedom to exercise the rest of the freedoms.
Right. I talk about, when I work with our entrepreneurs, I talk about what's the life that this business is supposed to be designing, right? Because you don't open a business just to have a business. You open a business because you think it's going to get you to a place of financial freedom that leads to these other freedoms. So, but we've also have to be thinking about, we've got to begin with the end in mind. If my goal is that I want to be able to go to Egypt 2 months out of the year, okay, so what are the things that we need to put in place to make that happen? And what's the number, what's the dollar sign that will allow that to happen, right? And make sure all the other things are taken care of. So I love that. That's beautiful. And I 100% agree. So as we sort of kind of like slide into the end zone here, if you could give one money move or one piece of money advice to our listeners to do different better, what would it be?
It's not important to get it perfect. You just need to start. Okay, I'm stealing it from another coach that I have, but really, do not wait for the perfect interest rate. Do not wait for the perfect stock. Do not wait for the perfect cash flow. You gotta start. It's much more important to start than getting perfect. So I'm always saying, if you go to a club, if your objective is you gotta dance with the most beautiful girl, you might end up not dancing at all night. There's somebody who's happy and dancing with everybody. So do not pick the most beautiful girl. That it's just a losing game, right? So just a good stock is good. A good real estate property is good. And focus on just starting. Okay, starting is very important. And I'm an engineer, so I know. I like it perfect. I like the best thing. I analyze to death. So not a good way of doing things.
Okay, I love that. I'm very similar. Just get off of zero. Just get off of zero. Yeah. So that's amazing. So we'll share with our listeners and viewers what you have for them. Do you have an upcoming academy that's starting? What's the best way for them to get a hold of you?
So good. I remembered now. So on this Saturday and Sunday, I have a 2-day free training. The first day was on how to invest responsibly in stocks and options. And the second day, how to invest in real estate. I have a partner who has 55 properties who's really good at this as well. So this is free. If you want to join, you can find me on a lot of social media. I can give you the social media Elaine to put as well. LinkedIn, Fadi Habib, FADI HABIB. My email is info@Legacy Wealth Builder Academy. My website, legacywealthbuilderacademy.com. So just get in touch with me and come to the 2 days if this will be aired before that. Probably not, but anyway.
Well, this we are actually going to air not this coming up Sunday, but the next Sunday. So, but
it'll be too late. So forget about it.
Okay. well, I will make sure I promote it on social, so people hopefully will sign up. I actually might be there, so we'll see.
It's 2-day free training, 9 to 4. It's a lot of value.
I love that. Well, Thank you so much. I want to thank you, Fadi Habib, for being on the show today. We have Fadi Habib, who's been my wonderful special guest, the CEO and founder of Legacy Wealth Builder Academy. And that make is a wrap for the Do Different Better show today. Today we have talked about, we've run the gamut. We've talked about Fadi's money memories. We have also talked about options and how to exercise options as an investing tool. We've also talked about how to mitigate the risk of leveraging options as an investment tool. We've talked about the 12 types of freedom, and we've talked about real estate investing. This was a jam-packed show. So if today's episode hit home for you, I want to hear about it. DM me at do better with Elaine and tag Fadi in that message so that we know that you took a lot away from the show. Share this episode with someone you know who is really interested in investing or learning more about investing in the stock market. But also be sure to subscribe and follow me for more real talk on wealth, work, and walking in purpose. Until next time, I'm Elaine Rasmussen, and together let's do different better.